Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, into the action we go today on this classic Tuesday, January 21st, 2014, the day after the markets were closed for Martin Luther King Day. And again, right now we're looking at a mixed bag on Wall Street. We're seeing some good strength in the tech sector with the NASDAQ up 22 points. However, the Dow Jones Industrial Average is lagging on the back of some poor earnings, Verizon being one of those plays that's down pretty decently. And the S&P is just hugging the flat line to the slightly positive side, up about 3 points on the day. So kind of a neutralish market with the tech sector leading and the S&P also positive and the Dow lagging on the day. All right, couple things to go over. Number one, markets saw more distribution today. What is distribution? Distribution is where the institutions or the big boys are selling into the small investor who is piling in this market. Margin is at all-time highs. What's margin? Margin is the amount of money average investors are borrowing to invest. It's at all-time highs, even higher than in 2007 before the financial collapse. All right, so what that's telling us is that the average investor is buying the market, and then when the market opens up and sells off like this, that is classic institutional selling or distribution. All right, so again, just be understanding of that. So what I'm really seeing is a weakening trend in this market. I know a lot of people would say to me, well, how are you seeing weakening when the markets are basically within 1% of the all-time highs? Well, let me explain this briefly. So if you go back to December 31st, we had a pivot high and we closed right there. It was the all-time high on the market, basically. All right, last Wednesday, we made a move up above those all-time highs, but by the end of the day, the market couldn't hold it and came back in. So right off the bat, instead of closing at an all-time high, all we saw last Wednesday was a peak above it, like a little peekaboo, and then a sell right back below it. All right, so that's number one. So you had a strong close, a little bit of a weaker close as it made a new all-time high, but then couldn't hold above it, and then we sold off here. And then today, we had a gap up, but notice the gap up today couldn't even take out these highs. And look at how fast we sold on that. And that's classic distribution again, folks. And I want you to make sure you understand that. That is just classic distribution 101. So, again, weakening trend in the markets, even though we haven't really seen any major selling. But for me, again, those are things I pick up on as a trader, as a pro investor. All right, and again, interesting here was the market in the early portion of the day sold as institutions dump early in the day. Then all these institutions go to lunchtime. What happens to the market? The markets float back up. Why do the markets float up over lunchtime? Because the volume is not there, because the institutions aren't there. They're at lunch. And sure enough, who's buying the market then? Classic retail investor. So you can really dictate almost every action in this market if you know what to look for. All right, couple other things, guys. So that's the intraday SPY chart. If we go to the daily chart, I'm not going to spend much time on this, but you can just see how December 31st high, and look at how hard it is for this market to break through. Now, what I will say to you is this week is a very important week for this market. And you might say to me, how come? Well, because you're getting sandwiched between the 20 MA rising in yellow right here and this double top here, triple top. The market by the end of this week is going to break one way or the other. It is. It's just that's the bottom line. It's going to move one way or the other. Question is, which way is it going to go? All right, and that's what we're waiting to find out. And again, if we close above the all-time high, basically if we close above 184.94, which is the all-time high from last Wednesday, then that would be considered a strong close with potentially a little bit more upside in the market. As long as we don't do that, for me, I'm in a neutral to negative stance on this market. So very simply laid out here for you in this video. All right, couple other things for you guys to look at. First of all, Goldman Sachs getting pounded today. Hit the 50 MA and bounced, but that is a nice sell-off, over $3.50 of sell-side action on Goldman Sachs today. JPM is also weak, so financials overall are in a weak position. All right, next up, tech, as I said, is strong. Apple is leading the pack today, up $8.50. Nice move on Apple, reversing the down move on Friday. Notice how it held this blue line, which I've talked to you guys about quite a bit. Also, Google having a very strong day, up about $9.50. That stock did make a new all-time high today at $1,162 per share. Amazon's having a good move today. However, Amazon has not made a new all-time high. See, again, here was a high, slightly higher high, and today you haven't taken out that previous high. So I'm curious to see if that stock does that. I mean, is it able to push up and do what a lot of these other stocks are? If it doesn't, then that's relative weakness that you're seeing in that, and that's something you want to pay attention to. Okay? So keep an eye on that very, very closely. Exxon and Chevron are going in opposite directions. We have Chevron trading up 90 cents today off of this little support line sloping up. Notice the bounce the last couple days on the daily chart, while Exxon was downgraded here and is down about 56 cents on the day. Okay, so that's what we have going on here in the midst of this market. Couple stocks out there that I am keeping my eye on. Number one, a small cap that I am thinking about. It's starting to look a little bit more interesting, is this one right here. And again, you can see I've traded it a little bit today. But bottom line is, look at this. All right, this stock, again, just a week ago, traded as high as $5. It's now almost back to where it was prior to that run. Now, I agree the news didn't warrant it to be up here, but it's pulled back to the point of almost negating. You have the two moving averages here. So this is definitely piquing my interest, this stock right here. And the symbol is MNOV. So I'm going to keep my eyes on this one as a potential swing trade, and we'll see again how it plays out in the next week or so. All right, guys. So again, keep an eye on this one. This is actually one of my favorites in small cap land right now. MNOV. Other than that, BlackBerry's having a good day. Some short covering there in BlackBerry. And as I scan through, I mean, we had some earnings news from Verizon today. Verizon's taking a pretty big hit. Take a look at the intraday on Verizon. Smoked. It opened higher and then just sold off. And since, again, since the lunchtime bounce, you've seen it come up just a little bit. But, we'll have to see again how that plays out. But a weak showing on that stock. J&J had a little bit of earnings here. J&J, bring that chart up. And that stock is also seeing some selling. So these are two Dow components. Remember I said the Dow was down today and lagging? Well, this is two of the reasons why today. J&J and Verizon. All right. Let's take a look at Schlumberger, SLB. This stock's trading up slightly, opened higher and has came down and then bounced off the 50. But really, it's up 88 cents. That's not that big of a move considering the markets are neutral to positive today. All right, I think that's about all I wanted to discuss today, folks. But I hope you understand what I'm saying about the market, because that's the essence of everything right there. All right, have a great afternoon, great evening. Come join us at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. That's geared towards investors and swing traders, and you will profit for life. Take care.